Okay, so let's get right into it. So let's start off with Greece. I mean, Greece has really been under the spotlight, and I mean, unfortunately for me and you, we are people that viewed as part of the problem. Nevertheless, how much of a problem would you say that Greece is down the line? And are we just starting to get too fearful about Greece leaving the Eurozone, and this just filtering through into the equity market as well?
No, I think it's quite correct to be a little bit on the fearful side, but it's almost a little too late. One should have panicked over a year ago when we saw these problems on the horizon. The major impact it does have on the rest of the world is that, particularly Europe, is that although it's a small part of the economy of Europe, the impact and the ramifications in terms of the actions that the Germans particularly will take and the rest of Europe vis-a-vis the debt in Greece and how they handle that could have really negative influence on what happens in Spain, Portugal, Ireland, and even Italy potentially.
Okay, so Kimon, and looking at some of the politicking that is currently on the go, I mean, again, it just is affecting sentiment on the equity market. So where to from here on the equity front? Do you think that most investors are just really focused on, the conversations that are happening between Greece, between Merkel and between the likes of Hollande and overall the EU summit, gathering and not really coming up with any decisive action?
No, there is no decisive action, although there were a couple of things that were significant about the most recent meeting that they've had. The first one is that they actually, for the first time, actually talked about Eurobond issuance, which I don't think is appropriate right now. Unless you've got fiscal union, you shouldn't really be talking about Eurobonds, but at least they're looking in that direction. Another area of significance is that we've seen in the most recent elections, if you just look at France, if you look at Greece, we've seen a sharp swing to the left and away from austerity measures. So I think this almost looks like the first time that they may be willing to budge a little. Although the German are still saying they're not going to budge at all on austerity, there has to be some talk that perhaps some measures might be introduced. We do know, I mean, both you and I have got family and friends in Greece, so we know how people are genuinely struggling on the ground there. So if Greece should leave the euro, they can't be kicked out unless they do certain things with, in terms of defaulting. But if they do choose to leave, it will actually be their choice. Then I think the markets are starting to factor that in. And your original question about what kind of moves we're going to have in the market, I think the gyrations are going to be there at least until the elections in the middle of June in Greece.
Yeah.
I think the volatility is going to remain, and I don't think the picture is all that clear. Okay,
Kimon, and we, around 30 seconds to go before the close of trade in South Africa. We're sitting slightly to the negative today. Yesterday we had a positive day, and again, some of these stocks are just looking so cheap and so attractive. But do you think that they are cheap and attractive for a reason? And I'm talking predominantly about those resource companies.
I think market is such that those stocks can become even cheaper and even more attractive over time. I think just on a parting note, I think what's important here is we're seeing contraction of growth in China, we're seeing problems in Europe. The only area that appears to be okay right now is the US in the short term. I think we're going to be under pressure. South Africa potentially may have a downgrade over the next month or two. So I think right now the equity picture is more risky.
Okay, Kimon, markets officially closed in South Africa and we're flat slightly to the negative today, mostly red across the board, a few spots of green coming through as well. And again, it's those resource companies that are starting to disappoint quite a bit. So let's quickly check in to see how the overall picture is playing on the top 40 front. I'm assuming that's what we're doing right now. There we go. Okay, no, we're not. We're taking a look to see how the market traded. JSE All Share flat slightly to the negative today. We're down 56 points, 32,989. Resource 10 counters, as you can see, down 0.7%. Financial 15 taking a 0.6% knock, so flat there as well. And industrial 25 surprising to the upside, flat slightly to the positive, but again, just keeping in mind it's those industrial stocks that have actually pushed the overall market to the record levels that we've seen so many times already this year, and it seems the resource counters are the ones that are dragging us lower. Euro dollar 125.14, the euro is still on the back foot. We're seeing dollar strength against this cross. Euro is down 0.9%, and the Brent crude price sitting up 0.3% $106.90 a barrel. Platinum recovering slightly, gold up $5.75, and we've got the dollar rand at 837.80. As you can see, the dollar rand cross sitting flat at this point in time, but we've seen a bit of negativity. We've seen quite a bit of dollar strength, and again, it's all about those elections. We've got PMI numbers coming out of China as well next week, so we'll be taking a look at all those numbers. And Kimon, back over to you. I mean, we've got the industrials sitting up slightly today. We've got those resource counters disappointing. Banks also sitting on that flat line, but nothing really, dramatic to say that, we know where investors are going and what they're thinking. Again, it's those retail stocks that are just always doing so well.
If you take a step back, it's been an area that's done particularly well over the past couple of years. Their numbers are good. There is growth into Africa, with particularly ShopRite in mind. So you're seeing expansion in the right places. You're seeing particularly food. And if you think about it, what do people need? People will need to buy food. Currently, I don't think anyone wants always in a position. If you look at the man in the street, their spending power globally is a lot worse than it was a couple of years ago.
Yeah.
And people are trying to save. So I think you've got housing under pressure. You've got prices of commodities actually coming back. I don't think we're going to see a lot of economic activity in the short term in the BRIC countries. I think they're also going to be under pressure. China's under pressure. Europe's under pressure. I don't think there are a lot of places to hide. So I can understand why the retailers are doing well, particularly food and cash retailers.
Okay, Kimon, and we've had quite a few, companies out with results today. Just looking at Mr. Price as an example, we even had Taste Holdings out, of course, a smaller sort of player within the food and even the jewelry sector. Richemont has been doing quite well on the numbers. So again, they just keep surprising to the upside, and everyone just keeps saying they keep surprising. We keep seeing good numbers coming through. This is a very good story and one that could continue for quite some time.
Well, it appears that way. I think Richemont, it's a usable stock. It's a special case. They control and are owners of so many of the premier brands globally, and their growth has really been in the East. And I think as long as there is growth in the East, despite the fact that it may be declining over the next while, they're still growing. And I suspect that a company like Richemont is one of the few diamonds that one can actually, find some relative safety in.
What about those banking stocks, Kimon? What is your view on banks right now, where we're starting to see reversion back to double-digit growth territory? We've had the SARB coming out and saying that it's going to increase liquidity lines into 2013. Basel III requirements could be coming onto the market very soon, I think by the end of this year or so. So there's various dynamics that are playing out in the midst of all of this. We even have a downward revision of what we can expect on the growth front.
Well, I've avoided bank stocks for many years until late last year, where I dipped my toe in the water and actually purchased some. But I'm selling again because I think we had a nice bounce and it's time to get back out. I think the banks are still going to be under pressure. I think regulations globally are going to have their eyes on banks, and they're not going to be in lending mode. I don't like what I'm seeing from the commercial banks in South Africa. I think that's one of the things that makes me negative. I think their growth is coming from all the wrong places. I think their strategy of giving unsecured small loans to many people is going to backfire on them, and I certainly don't think that that's a great strategy, and yet they're all doing it. I mean, it's not quality earnings in my opinion.
Kimon, those gold miners, I've also been watching, Harmony and Goldfields quite closely, and we had quite a nice push to the upside in yesterday's session, where we're starting to see the Rand gold price not really moving very much. But again, we're starting to see a bit of optimism coming through into the sector. Do you think that it's here to stay? Do you think it was just, traders having a little bit of fun on the market?
Well, I think there are a couple of factors. Firstly, as you know, I prefer physical gold to gold miners. I've turned from being bullish on the Rand for the last couple of years. I think we're going to drift weaker. I think the risks in the Rand have increased, and so I suggest we will be going weaker, which will offer some kind of support to the Rand hedge stocks, as it traditionally has in South Africa. So it may give them some support. I'm not very fond of the miners. I think their costs keep on going up. The gold price is actually going sideways, and the only thing that's going to buffer them right now is a weakening Rand. So, I'd still be avoiding the gold stocks.
Okay, Kimon, and when it comes to the inflation outlook, we saw where inflation was this week. We had the MPC rate decision, staying at 5.5%. Those inflation-linked bonds, the drum that you've been beating for quite some time, is it working in your favour?
Yes, last year they were the best performing asset class. I think one should always have them in a portfolio anyway for good diversification purposes, and I'm sitting at 20% in the inflation-linked market. I really like those.
Fantastic, Kimon. Thank you so very much. Great to have you on the program.